Never trust a mortgage lender about how much you can afford. Let me repeat that. Never trust a mortgage lender about how much you can afford. Okay. Now, look, I'm not slamming mortgage lenders. This is not meant to be a slam on mortgage lenders at all. What it is that the way that we qualify you, it's really just a snapshot of your life. It's not your full life. So let's talk about conventional loans. So with a conventional loan, conventional or FHA, I am looking, or jumbo, I'm looking at your, what's on your credit report, student loans, car payments, credit card bills. And then I'm looking at the projected monthly payment, and I'm doing that versus your gross income. So that's your income before taxes, Social Security, healthcare. Oh my God, you name it, it's in there, right? Like, I don't know about you guys. Do you guys watch your paychecks and you're like, oh, that would have been good? And you're like, yay, government. Anyways, so yeah, we're doing your projected housing payment and your current debt on your credit report versus your income before taxes are taken out. Okay. Now with FHA, I can go up to a 55% debt to income, which means with your housing payment and what's on your credit report, okay, I can qualify you using over half of your income before they take out taxes. Okay, so let's just think about this. So if your income is 100%, you and I both know taxes, insurance, health insurance, taxes, all that fun stuff is probably gonna take out at least 20 to 30%, right? You've got state, you've got federal, depending on where you live. So let's just say 30%. Okay, between state and federal, which is low. There's certain tax brackets where they're gonna take 50% overall. They do. So it's very important that you guys know, okay, we're looking at that 100% number. We're not taking into consideration what's being taken out for dental and all of that fun stuff, okay? And then we can go up to 55 with FHA. So 100 minus 30, 70%, right? Okay, because we took out those taxes. And then you've only got between 55 and 70, so 15% to live on. That's for your gas. That's for your food. That's for your electricity. That's for your water. That's for your child care. If you have children. So that's the thing. The only loan, when we're calculating debt to income as a lender, that takes into consideration childcare is VA. None of these other loans do. So if you have a lender saying, hey, like you qualify, don't worry about it, and you're like, God, I don't really know how I can afford this, but the lender says I can, go with your gut. If you feel you can't afford it, ignore what the lender's saying. Ignore it, because they don't see everything. They don't see how many times you eat out. They don't see where you shop for groceries. They don't know how many groceries you buy, right? We don't take any of that into consideration. Now you might assume, well, they've got my bank statements. They're taking that into consideration, right? No, we're absolutely not. No, we're not. And it's not because, look, with lending, we have to follow the guidelines exactly, right? We can't start deviating into other arenas, or we can actually get into a lot of hot water. So like if, for instance, we saw in your bank statement that there was $1,000 going to Bob Jones every month, are we gonna ask you about that? Yeah, the reason we're gonna ask you about that though is we're gonna try to make sure that you don't have a debt that we don't know about. But if you're like, oh yeah, I was just paying him some money, you know, it's fine, I'm not paying him anymore, then we're like, okay, no worries, right? But we're not going through there going, you know, ABC preschool. VA we would, but FHA, conventional, jumbo, it's not part of the recipe. So it's really important for you guys to know that a lender's just seeing a snapshot of your life. Now, conventional can actually go up to a 50% debt to income in many cases. Am I seeing it more 45 and under right now? Yes, but it can go up to 50% too. So let's do that math again. 100%, take out 30 for all that garbage. And then you've got, you know, 50 to 70, you've got 20% to live on. Can you live on that 20%? So what you really need to do right now, if you're looking at buying a house, is you need to work out a budget. I know, the B word. Everybody hates a budget. No one likes doing it. Well, that's not fair. I've got some clients that love to budget, and I respect you guys. I hate budgeting. I think it's really not fun. But I use mint.com whenever I'm trying to figure out this stuff, because the last thing you want to do is get in over your head. And I cannot stress that enough right now. We are in a time of great inflation, and it doesn't look like it's going to ease off. Like the Fed's trying to slow it down by raising rates, but it's not really changing anything. We still have supply shortages. The cost of goods is going up. Everything from bacon, milk, cars, everything. It's more expensive. Everything is more expensive. So the biggest risk right now is that you guys aren't budgeting. You're not looking at what you can actually afford, and you're just blindly trusting a lender. It's not the lender out to get you guys. It's just we don't have the whole snapshot. So in order to be a responsible homeowner, you know, prospective homeowner, you really want to sit down and budget this stuff out, you know, because the last thing you want to do is get into your beautiful new house and find out you have to choose between electricity and water. And I say that and people think I'm kidding, but if you look at how much the cost of goods and the cost of services have gone up in the last year, I think there's a lot of Americans right now making that choice. And I don't want you guys to be part of that. So please, 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 please do a budget, see what you can afford, see what monthly payment you can afford, and then tell me if I'm your lender, say, Jen, I'm really only comfortable at XYZ, you know, and we'll have the conversation. Okay, cool. You know, this is what your debt to income is. This is what's going on. You could be like, yeah, Jen, I've got childcare. I'm like, oh yeah, I get it. I get it. And if it's not me as your lender, I gently weep. I'm licensed in 48 states, but let's say you're in Utah, right? Talk to your lender about this. And if you say, hey, I'm not really comfortable over $2,600 because I've got some other expenses I know you guys don't keep an account. If they say, don't worry about it, walk away. Okay, any lender who's not willing to take the time to talk to you guys about what payment you're comfortable with and why you feel that way is not a lender you should be working with. There's so many great talented lenders across the country who care about you guys. I really want you to find those people, and I don't want you to blindly trust that what a lender says you can qualify for is what you can actually afford. So as always, thanks for watching. Questions, comments, please reach out. Thanks so much, guys. Bye.